What is up guys, my name is Ignas, welcome back to the channel. Last week I've brought up MasterCard as an undervalued dividend name, and there was quite some opportunity, with a dividend yield around 12% under its 5-year average. So I've shared this information from my dividend investing watchlist. You can catch up on it, I will leave the link for the video at the top of the description. The stock did move up a bit this week, but the dividend yield still remains under average. I am holding the stock in my portfolio as you saw last week, and even after this week's move up, dividend yield is still under the 5-year average. But now I would like to bring up another name, which does have a better yield, even more higher to its 5-year average than MasterCard. And that name is Visa, ticker symbol V. It's the larger name from the credit services industry, but could actually be a bit cheaper with dividends in mind. On the year to date, the stock is going sideways lower for 0.56%. In 1 year, the stock still moved sideways minus 1.38%, but a 5-year growth was quite decent, with the stock going higher for 141.57%. So as the stock was going lower for the last 2 years, the dividend yield increased quite a bit, as the stock is now trading at 0.68%. And it seems that this trend may continue onwards, if the price remains at similar levels that it is trading right now. So how much undervalued it is actually compared to its dividend yield history? Let's open my watchlist on Google Sheets. So we have Visa in the watchlist, and this is here the dividend yield history for each quarter of the last 5 years. Out of this information, we can find that on average in 5 years the dividend yield was at 0.59%. So back in 2017, with the yield at 0.71%, it was 20.63% over the 5-year average. Then in 2018, with the price going higher, the yield went to 0.59%, pretty much right there at the average, a bit higher for 0.24%. Then with the price surging in 2019, we saw a yield of 0.44%, 25.24% under the 5-year average. 2020 started with a yield of 0.41%, which was the worst of the last 5 years, lower for 30.34%. It was a bit better in the beginning of 2020, as the yield went back to 0.59% right there at the 5-year average. And with the price going sideways this year, we now have the dividend yield at around 0.7%, which is 18.93% over the 5-year average. So looking into the yield history, the best time to get in was back in 2017, with a dividend yield of just over 0.7%, and worst time was the beginning of 2020, where the yield was 1/3 lower than the 5-year average. But buying right now at exactly 0.7 would give us a quite decent dividend yield in the levels that we only have seen 5 years ago back in 2017. So that looks quite a decent opportunity to get in. Now, should there be any concerns that this increased dividend is not sustainable? To further check into it, we will take 2 more steps. First, we'll take a look into the payout history, and then the dividend payout ratio. So let's start with the first step, and this is Visa's dividend payout history of last 5 years. Back in 2017, they were paying out 63 cents per share. Then in 2018, it was increased to 77 cents. 2019, 94 cents per share. In 2020, there was a bit of a slowdown in dividend payouts on the trailing 12 months, as we had it at 89 cents, but that came back on track in 2020 with $1.25, and with the most recent quarter in, the trailing 12 months payout is at $1.40. So it looks like the payouts has been continuously increased, and that is very similarly reflected in the share price. But it turns out they have been increasing dividends for way longer than 5 years. Dividend.com suggests that Visa has been increasing dividends for 14 years straight. If I remember correctly, that is a longer period than we had for MasterCard. But now let us take the second step. This is here Visa's dividend payout ratio. The percentage suggests how much of company's earnings are distributed back to shareholders as dividends. So in this case, Visa's payout ratio is at 17.85%. This means that the company is giving back less than 1/5 of their earnings back to investors. So they have plenty of cash left over to invest that money somewhere else, or otherwise keep on consistently increasing on their dividend payouts. So that was it. Make sure to support the channel and leave a thumbs up under the video. What do you think? Which is better, MasterCard or Visa? Share your preference or your holdings in a comment below. If by any chance you would be interested in getting access to my dividend investing watchlist, then consider memberships. By becoming a member, you will get access to Discord, where I share all my Google Sheets documents and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I did an analysis on another company, so if you would be interested in that, then click on a video that is currently on the screen. And that was it from my side, thank you for watching and I will be seeing y'all in the next one.